Officer Kim Wilson. Before we begin, I would like to remind everyone to silence your cell phones. We're going to do a mic check, so if you could please push down on the button that says push, wait for the light to turn green, and then state your name, appellant. Could you state your name, please?
Harpoonam Alak, I'm the representative.
Thank you.
Bipin Kumar, representing SAII Enterprises.
And then when you're done speaking, please push the button again. Thank you. CDTFA?
Nalan Samarikrama. Thank
Thank you.
Jason Parker. Christopher Brooks.
Thank you. As mentioned in the pre-hearing conference on June 19th, this hearing is being live streamed on OTA's YouTube channel. So please refrain from saying anything confidential, such as bank account numbers, home address, etc. Any questions before we begin? Great. The live stream has started, so let's go ahead and go on the record. Good morning and welcome to the Office of Tax Appeals. I'm Hearing Officer Kim Wilson, and this hearing is for the appeal of SAII Enterprises, LLC, DBA Best Motors. Our stenographer, Ms. Alonso, is present and reporting this hearing verbatim. To ensure we have an accurate record, we ask that each person speaks one at a time and avoid speaking over one another. Also, speak clearly and loudly. When needed, Ms. Alonso or any panel member will interject to ensure proper transcription. After the hearing, Ms. Alonso will produce the official hearing transcript, which will be available on the OTA website. The Office of Tax Appeals is not a court, but is an independent appeals body, which is staffed by subject matter experts and is independent of any tax agency. While the Office of Tax Appeals is not a court, we must nevertheless follow certain guidelines to ensure that we establish a proper record and on which a decision is based and to conduct an orderly hearing. Each party will have the opportunity to be heard, so please wait for your turn to present your side. Also, I may interrupt the hearing if we get out of order or become counterproductive, as keeping us on track and creating a clean and efficient hearing record is part of my role as lead. Are there any questions about anything I've said before we? No? Okay. This is the appeal of SAII Enterprises, LLC, case number 23-101-4525. The date is July 22nd, 2025, and the time is approximately 9:30 a.m. And this hearing is being held in Sacramento, California. As I stated earlier, I'm Hearing Officer Kim Wilson. I will be the lead for the purpose of conducting the hearing. My co-panelists are Judge Geary and Judge Ralston. OTA noticed the parties on July 16th, 2025, that Judge Geary is replacing Judge Turner. Does the appellant have any objections to Judge? No? Okay, could you please?
No.
No objection.
Great, thank you. Hearing no objection, Judge Geary, Judge Ralston, and I are equal participants in deliberating and determining the outcome of this appeal. Okay, I'm going to ask the parties to identify themselves and who they represent, starting with appellant.
So I'm I'm representing like SAII Enterprises.
And your name?
Harpoonam Alak.
Thank you.
Myself, Bipin Kumar, with the SAII Enterprises.
Thank you. And CDTFA?
Nalan Samarikram, hearing representative for CDTFA.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Good morning, Christopher Brooks, attorney for CDTFA.
Great. And CDTFA, no objections to Judge Geary?
No.
Thank you. Right. As stated in the minutes and orders, the issue to be decided in this appeal is whether adjustments to the determination is warranted. Ms. Alec, do you agree that this is the issue?
No.
No?
Sorry. Can you repeat? Sorry.
The issue to be decided is whether the adjustments to the determination are warranted.
Yes.
Thank you. CDTFA?
Yes.
Thank you. Appellant submitted Exhibit 1 and bank statements for Bank of America and Wells Fargo. I've separated the bank statements into two exhibits as follows. Bank of America statements are Exhibit 2, and Wells Fargo statements are Exhibit 3. Yesterday, OTA received a spreadsheet from appellant that appears to be a summary of deposits that appellant would like excluded from Exhibits 2 and 3, as well as a calculation for the total tax due. CDTFA, have you had a chance to look at the submission?
This morning we reviewed.
I'm sorry?
This morning we reviewed the document. Yeah.
Okay. And no objection?
No objection.
Okay, great. So we will label this appellant's calculation of additional tax due per taxpayer as Exhibit 4. Therefore, Exhibits 1 through 4 are admitted into evidence. CDTFA submitted Exhibits A through M. Appellant did not object to the admissibility of these exhibits. Therefore, A through M will be admitted into evidence. Appellant indicated during the pre-hearing conference that they will be calling Mr. Kumar as a witness. CDTFA did not object to the witness. Ms. Alec, you will have 30 minutes for your presentation and witness testimony. Before we begin appellant's presentation, I need to place Mr. Kumar under oath. So, Mr. Kumar, could you please raise your right hand? Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes.
Thank you. Ms. Alec, you may have your witness testify in a narrative or ask specific questions. Please proceed when you are ready.
So yes, so I'm ready. Yes. Okay. So I'll be like. Sure. Sure. So all right. Good morning, everyone. So I'll start with the Exhibit 2 with Bank of America. So the first of all, like for April 25th, 2016, for the amount of $1,000, so it's like online transfer. And like for April 26, 2016, another like $1,000 that's transfer from Wells Fargo. So I just want to ask, do you want to go like with each and every transaction, or should I just go with the summary?
It's up to you how you want to do your presentation.
Okay, sure. All right. And so on like May 5th, May 2nd, for $3,000, it's a transfer from Wells Fargo. And then on May 4th, 2016, again, $1,500, that's an online transfer. May 18th, for $1,000, that's transfer from Wells Fargo. May 27th for 2,000, it's transferred from Wells Fargo. June 6, 2016, for $1,000, it's transferred from Wells Fargo. June 24th for 1,000, that's transferred from Wells Fargo. July 1st, 2,000, that's transferred from Wells Fargo. July 15th, 2016, for 1,000, that's transferred from Wells Fargo. And then on November 2nd, 2016, $10,000, that's business is funded via line of credit. Then February 24th, 2017, for $1,000, it's a transfer from Wells Fargo. April 10th, 2017, it's another 1,000. Then April 28th, for 3,000, that's transferred from Wells Fargo. Then June 20th, 2017, for 10,000, business is funded via line of credit. Then June 20, 2017, for 3,000, that's a transfer from Wells Fargo. And then on July 5th, 2017, for $59,883, that's a loan from third party because my client was like always kind of short, so he borrowed money from the friends or family. And then on July 17th, another $34,099.37. That's a loan from third party. Then on August 7th, August 9th, August 11th, 15th, August 15th, August 20th. Sure. August 7th, 2017 for $1,000. August 9th, 2017 for $1,000. August 11th, 2017 for $1,000. And August 15, 2016 for $1,000. August 15, 2017 for $1,000. August 24, 2017 for $1,000. These all are transferred from Wells Fargo. Then on September 20th, 2017, $10,000, that's funded via line of credit. Then September 20th, 2017, $4,000, that's a transfer from Wells Fargo. Then on October 4th, 2017, $23,000, they're borrowed from friends and family. Then on October 27th, 2017, $7,800 is borrowed from friends and family. November 2nd, 27, again, $7,000 is borrowed. November 10th, 2017, for $5,000, that's borrowed from friends and family. November 14, 2017, $4,500, that's borrowed from friends and family. And then November 17th, for $79,839, that's the escrow payment. Business was sold, and that's a payment from that. And then December 5th, 2017, $4,000, that's borrowed from friends and family. So the total amount, the Bank of America deposit, which should be excluded, are $287,000, $622.95. That's Exhibit 2 for Bank of America. Then Exhibit 3 from Wells Fargo, February 9th, 2016, $10,000, that's funded via line of credit. February 9th, 2016, $5,000. February 9th, 2016, $5,000. February 11th, these two are transfers from Bank of America. And then February 11th, 2016, $10,000, that's a transfer from Bank of America. February 16, 2016, $5,000, that's borrowed from friends and family. May 10th, 2016, $2,000. And May 17, 2016, $5,800, that's a transfer from Bank of America. June 9th, 2017, $10,000, that's a business loan. June 19, 2017, $45,475, that's a business loan. August 3rd, 2017, $3,000, that's a transfer from Bank of America. August 10th, 2017, $10,000, that's a business loan. August 30th, 2017, $25,000, that's a business loan. October 13, 2017, $3,000, that's a transfer from Bank of America. October 16, 2017, $5,000, that's a business loan. May 1st, 2018, $30,000 borrowed from friends and family. June 4th, 2018, $4,200, that's a transfer from Bank of America. June 25th, 2018, $1,500, that's a transfer from Bank of America. June 27, 2018, $4,425, that's the next gear, that's a funding, from the auction for flooring. And August 6, 2018, 40,870, that's borrowed. And September 25th, 2018, 68,573, that's borrowed from friends and family. October 24th, 2018, 27,500, that's borrowed. October 24th, 2018, 85,000, that's borrowed. November 2017, 2018, 25,965, that's borrowed. December 11th, 2018, $22,727, that's borrowed from friends and family. And the total is $455,071 and 88 cents. So these all the amounts like from Bank of America and Wells Fargo, they combined almost like 733,000 roughly. And then the exhibit fourth, as per the hearing officer. So total bank deposits per taxpayer, that's like 2.1 million, 58,968. So I'm like reducing to like less reported fixture and equipment sales, 30,000. And then adjusted bank deposits came to 2.1 million, 28,968. Auto sales per DMV data, 1.5 million and 1.5 million, 30,900, and taxpayer and CDTFA, they are accepting, they have the like same number. Less claim demand title transactions, that's $308,850. CDTF is not like considering these, but taxpayer does have receipts from the clients. The clients, they paid the sales tax on that. And then less sales for resale, it's considered by the CDTFA. Then taxable auto sales, it came to 1.1 million, 36,605. Reported taxable auto sales, it's just like reported taxable sales like 573,971. The additional taxable sales is $562,634. So I'm putting the average like tax rate, that's 8%. So additional tax on auto sales is like $45,010. The second part is auto part and labor sales. So from that 2.1 million, the top adjusted bank deposit, so I'm subtracting all the like auto sales per DMV and others. So it's coming to 598,000. So taxable percentage per parts versus labor, like considering 45%. So taxable part sales are coming to $269,130.60. Average tax rate 8%. So additional tax on part sales coming to $21,530. So combined 45,000 for the auto sales and 21,530 for the part sales. It's coming to 66,541. So taxpayers, so we are like accepting this tax, taxpayer is ready to pay this tax too. Yes. So any questions on this one?
We'll hold our questions till after you're done with your
Okay,
presentation.
sure. So after talking like taxpayer, so my clients, because the bank deposits, they are like 2.9 million in the bank, but all these exhibit 2 and 3, they were not excluded from that. So we had like conversation with the CDTFA before, because these are like, like internal like transfers. Sometimes the taxpayer, he's running short, so he has to borrow money from friends, sometimes from line of credit. So in that way, so just to keep the like business going on, so taxpayer, he always has to like borrow money or just, from the like line of credit, just to keep the business going on. So yeah, so like taxpayer, we are like, accepting up to like 63, which makes sense, on the basis of the bank deposit. But with the CDTFA, they have like so many like, projections, estimation on the basis of markup. So those numbers, they are like really increasing the like tax, the tax due a lot. So we are not accepting that. So we are accepting up to like 66,000 in tax due.
Did you want to have Mr. Kumar testify at all?
Sure, yeah. So if you want to just speak on this one, yeah. Funds, shortage.
Hi, this is Vipin. So I've been doing business. I was running two businesses. One was auto sales and one was auto repairs. So I started the auto sales in 2016, right around in February or stuff. So I was funding that business, and on the other end, I was doing auto repairs where right around in that time period, there was a competitor came right next to our business. So business slows down from there because there was not much we were doing. The reason for me, so I can do some more repairs for my vehicles because not much was going through. And there was always short of funds because if I'm doing auto repairs, something comes in and there's a bills comes up for auto sales or the employees and all those steps. So wherever the funds were coming in, it was just coming in these two accounts, and I was just taking it out. If, for example, if the funds need to be paid via Wells Fargo, and I have some funds came in Bank of America, so I just need to withdraw and make those payments going through. That was going on occasional time period. So what the department is saying, since I was removing funds from there and depositing in another, and they consider all as a sales. In a auto sales, the max sales we did about like $500,000 a year. Because certain time the cars, we get it from the auction house, couldn't get fixed on time and takes time and all that stuff. Some of them we were taking a loss, and I resell it back in the auction house, which is the department says about 85,000. So I was not able to sell. The vehicle was sitting in for like 6 months, 8 months, or I was either taking a loss and just because I need to pay the bills and stuff. And there was another occasions where some of the vehicles were sold out of state, or some customers wants to do their transfers on their own, which comes up as a demand of title sales, where we give all the paperwork with the statement of fact stating to the department that we are not liable for the tax. The customer, whoever is going to register this, is going to be paying the back fees for the DMV, and they're going to be paying the sales tax at the time when they're going to be process the transaction in the DMV. Without the statement of fact, DMV cannot process that transaction. So we were doing that as a complete packet and performing that. And as a example, I reach over to when there was going on regarding this, put everything on me that I'm responsible. I went to the DMV headquarters on Broadway and try to get some information. I took a list of customers and try to get like, okay, if these customers paid or not. But what they were saying, since these vehicles is being transferred, they are not able to share any information with me because it's more private. Then what happened, some of the customers I reach, and I request them to send me registration cards, so that way I can see, because it shows on the registrations if the taxes is being collected or paid or not. So we give them at least like 10 or so some examples which showed the vehicles, however that complete packet was given to the customers. Those customers went to the DMV and did the process, the transactions, and they did paid the sales tax at the DMV. But what the department is saying, I am also liable for all that $308,850, what the demand of title sale, what I did. So the taxes is being collected, so they want to collect more tax from my end, which I showed the proof. So business, the big tires, I sold that business in 2017, I think October the 31st. So just before closing, business was already slow because of the competition. And right around after the second quarter, I was just cleaning up. I was not doing much of the work because I know I'm gonna sell that place, because the landlord was gonna increase my rent $3,000 a month higher, which I was not able to do it. So that I just decided to just sell out and go out. And That's what happened. So automotive sales and the automotive repairs, I was basically just doing my repairs and just fixing ups, because sometimes I would just grab like 10 cars from the auction house, and they were sitting at the repair shop. They were not selling every day. The cars were there posted. Some is being sold in a day, some is being sold in a month, or certain cars were just sitting there for a year. And I've been using flooring lines. So the auction house is giving me a flooring line, so I was using it. But at certain time, I'm short of funds. So wherever I'll be able to grab something from my family, friends, so I kind of like keep of it, because I bought the vehicles. I need to do repairs. I need to pay for the employees. I need to pay the overhead and everything. And that was what going on between my accounts. And the most, if I see 500,000 and 1.5 mil, the most I did in auto sales, that's period. And then on auto repair side, the most on an auto repair side, when we was not in competition, I was doing about like 270, 250 to 300,000, the most. But right when the competition comes, everything drops. But the department did 300%, 500% increase on just for no reason. They are not looking on logic things. The business is being shut down. How you putting on a 2018? They are putting me like 300% as or 200% as a auto repairs sales for the whole 4 quarters. I didn't even did no business. The business was shut down. There's the escrow check was being received in November, but we were in an escrow before. But when I was in an escrow, we were not doing no business over there. And I'm just going through this. I don't have that kind of money or anything. I didn't get anything. I just lose the vehicles, the same thing from the auto repair side. I'm just lost everything. But they're just putting me with the bills of this, bills of that, which is just ridiculous. Doesn't make me no sense. Whatever is fair, I'm willing to pay. I'll ask my friends and family to help me. Otherwise, this is just like killing me. I can't survive like that. It's just like I need to hang myself. It didn't left me with nothing. I don't have no choice. I have family. I need to live with them. But this thing is just forcing me. I even met with Mr. Paul 2 times. I explained them everything, whatever they need, whatever the information I gather, because 2-3 times it happened at my place. There was a break-in. Break-in happened. I lost some of the stuff. That is the reason why I'm short of the information. There's the police reports. Everything happened and been explained to Mr. Paul, but it's just they just putting all those numbers on me for no reason. I did not did that what they are saying. I know the guard, I'm just telling straight. The most the business did was $500,000. The most the auto repair business, what I did like 250,000 to max, not even touching the 300,000. They are making it as a $500,000. I wish I had that going. I was not surviving one day. Certain days at the shop, I was only getting $10 coming in, just a $10. And my overhead was over $400. How I was gonna survive with that $10? What I need to do, I need to shut that down. And they are asking me for this much money, which doesn't make me no sense. That's why we are here. We need a help. We've been go through wherever we need to go. I'm trying to go. I'm not running away. But please, at least do something. See what is fair or not. They see how much time we spent from that till now. Everything we spend it on, everything on there with everybody's time is precious. We should be doing something else rather than just putting the numbers on somebody. If the business did like $3 million, I wish I did $3 million so I could pay. There's nothing. The business was just doing the max. That's it. I'm very sorry, but it's just killing me. I'm done.
Okay, thank you. Ms. Alec, do you have anything further you'd like to add on your presentation?
No.
Okay, CDTFA, do you have any questions for the witness?
We don't have any questions.
Thank you. Judge Geary?
Could I defer until after the department presents?
Of course.
Thank you.
Judge Austin?
Yeah, I just had a couple of clarifying questions. You stated that you, I think during your testimony, you said that you had resales back to the auction house where you purchased the cars?
Yeah, so we did some of the cars being sold it back since not being sold on my floor, and some we couldn't fix or something. So I sold it as is back in the auction house, which is about $85,445.
Okay, and then with regard to the money that was borrowed from friends and family, how was that done? Did you sign a promissory note with them? Did they give you a check for the amounts? How did that happen?
Some of the is the checks, some of the cash is I've been doing this to the auction houses. The reason the vehicle's not fixed, and those is being sold to the another dealers from the auction house, how we bought it. But from my family and friends, what I got as some of the checks, majority of the checks, and some of the cash.
Okay, and for any of those loans, did you sign any promissory notes or have any documentation with the family members?
Some of them I do,
Okay.
yes.
Would you be able to provide that information to us if we gave you some time to do that?
I was looking into, like I said, some of the documents I lost. There's a couple occasions it happened. My vehicle got broken, and there's some occasions when there was a break-in into my business, and that is the reason I'm short on some of the documents.
Okay, and then just my last clarification question. You said that you were in escrow, and so when were the businesses closed?
It was the 10/31/2017, I believe, was the last day.
Okay, thank you.
Yes, big tires.
Thank you.
All right, we'll move on with CDTFA's presentation. Since CDTFA is not having any witness testify, they're only arguing the appeal. So they will not be testifying under oath or affirmation. Mr. Samara Wikrema, you will have 40 minutes for your presentation. Please begin when you're ready.
Thank you, Judge. Pellant, a California limited liability company, operated two business activities at separate locations in Sacramento, California, under a single seller's permit. The first business was called Best Motors, and the second business was called Big Tires and Glass to You. Pellant received its seller's permit on February 2nd, 2016. The department audited Pellant's business for the period of February 2nd, 2016 through December 31st, 2018. This is Pellant's first audit. Best Motors operated as a licensed used car dealership in Alpine Avenue, where it made retail sale of used cars and also made used car sales for resale. The second business, located on Gerber Road, provided sales and services for new and used tire sales and provided sales and services for car window repairs, replacements, and installation. The business also sold various merchandise including rims, auto parts, and other accessories, and performed various services such as oil changes, smoke certifications, and other related services. In October 2017, Pellant sold the second business and its fixtures and equipment. After that, Pellant began to sell tires and parts from the Best Motor business on Alpine Avenue. On March 31st, 2022, Pellant closed its seller's permit. During the audit period, Pellant reported total sale of around $1.4 million and claimed various types of deductions, resulting in reported taxable sale of around $574,000, including sale of fixtures and equipment of $30,000. And these amounts are shown on Exhibit A, page 125. During our presentation, we will explain why the department rejected Pellant's reported taxable sales, why the department used an indirect audit approach, and how the department determined Pellant's unreported taxable sales for Best Motors and unreported taxable merchandise sales for Big Tires and Glass Tube for the audit period. During the audit, Pellant failed to provide complete sales records for the audit period. Pellant did not provide complete documents of original entry, such as complete Department of Motor Vehicle reports of sales, dealer jackets, sales contracts, financing contracts, reposition documents, sales journals or sales summaries to support its motor vehicle sales for its used car sales business. Pellant also failed to provide its POS download with all folders, credit card sales receipts, work orders, estimates, and other related sales documents to support its tire sales and merchandise sales for the second business. Pellant also did not provide complete purchase information or purchase journals for its businesses for the audit period. During the audit, Pellant was unable to explain how it reported its sales on its sales and use tax returns, or explain what sources it relied upon to file them. During the audit fieldwork, Pellant indicated its understanding that all vehicle sales were demand of title transactions, with customers responsible for sales tax payments to the California Department of Motor Vehicles. Therefore, throughout the audit period, excluding first quarter 2017 and second quarter 2017, Pellant consistently excluded vehicle sales from its taxable sales calculations on its sales and use tax returns, either by netting them out or by claiming them as non-taxable sales. And these are shown on Exhibit A, page 125. The department did not accept Pelham's reported taxable sales due to lack of reliable records and due to Pelham's unusual reporting practices. The department also determined that Pelham did not provide complete books and records that could be used to verify its reported total and taxable sales for the audit period. The department completed 4 verification methods to verify the accuracy of Pelham's reported total and taxable sales. First, Pelham provided federal income tax returns for years 2016 and 2017, and these are shown on Exhibit F. Pelham recorded around $1.6 million in gross receipts on Pelham's federal income tax returns, but only reported around $956,000 as total sales on its sales and use tax returns. And this is shown on Exhibit A, page 291. Thus, Pelham failed to report over 38% of the sales recorded on its federal income tax return for these periods. The department also compared the aggregate reported sales of both businesses of around $956,000 to the cost of goods sold of around $645,000 reflected on Pelham's 2016 and 2017 federal income tax returns. For year 2016, the department calculated a reported negative book markup of around 39%. For year 2017, the department calculated a positive markup of around 62%. And the information required to calculate these markups are shown on Exhibit A, page 291. From DMB and auction house purchase information, the department determined Pelham's vehicle sales markup was around 64%. And based on the tires and parts cost profit analysis reports, the department determined a markup of around 83% on taxable merchandise as the second business. And these calculations are shown on Exhibit A, pages 163 and 181. Second, Pelham stated that it maintained 2 bank accounts. Pelham used Wells Fargo bank account for Best Motors, and it used Bank of America for big tires and glass to you. Pelham provided Wells Fargo bank statement for the period February 2016 through December 2018 and Bank of America bank statements for the period April 2016 through December 2017. The department compared Pelham's reported total sale of around $1.4 million with a net bank deposits of around $2.9 million and calculated an overall difference of around $1.5 million. And the information required to calculate this difference is shown on Exhibit A, page 125 and Exhibit J, page 25. Thus, only 49% of his net bank deposits were reported as sales for the audit period. Third, because Pelham did not provide complete sales records, the department obtained Pelham's DMB sales information, and that is shown on Exhibit B. As stated earlier, Pelham stated that it considered all vehicle sales as demand of title transactions, where customers are responsible for reporting sales tax payments to the California Department of Motor Vehicles. Therefore, the department scheduled Pelham's DMV sales for the audit period and calculated around $1.1 million for the audit period, and this is shown on Exhibit B. Fourth, Pelham provided its merchandise sales information for year 2016, except for April through July 2016. The department spot tested sales records for first quarter 2016 and fourth quarter 2016 and noted several errors, including the collection of excess tax reimbursements, some taxable items sold, ex-tax, and the recorded taxable merchandise sales exceeded the reported taxable sales for first quarter 2016 and fourth quarter 2016 by around $46,000. And this is shown on Exhibit A, page 183. Based on these four verification methods, the department concluded that Pelham's records were unreliable. Further, the department determined that it could not use a direct audit approach based on Pelham's books and records. Therefore, the department conducted further investigation by analyzing Pelham's DMV information, auction house purchase information, consumer use tax information, and bank statements for Best Motors, and federal income tax return information, Form 1099-K information, tire recycling reports, and merchandise sales records for first quarter 2016 and fourth quarter 2016 for big tires and glass to you. Automobile dealerships in California are required to submit a retail report of sales to DMV after the completion of a retail motor vehicle sales. The DMV then compiles this information as part of its report of sales data. The filing of a report of sale is presumptive evidence that the dealer who files the report of sales is the person who actually made the sale. The department was able to obtain DMV information, which included report of sales data sorted by the Pelham's dealer's license number, and this is shown on Exhibit B. The department analyzed Pelham's DMV information and removed duplicate sales and unwinds. Then the department calculated estimated vehicle sales from vehicle license fee code data used by DMV. When the DMV receives a report of sales, the vehicle selling price is converted to a 2-digit alpha code, also known as the vehicle license fee code. And these vehicle license fee codes are shown on Exhibit B, column 20. Vehicle license fee codes are established in $200 increments. So the department converted these vehicle license fee codes back into dollar values by using the lowest value in the vehicle license fee codes range to estimate the sales price, and this is shown on Exhibit K. As a further step, the department also obtained Pelham's report of sales for year 2017 from its consumer use tax section. The department compared Pelham's actual vehicle selling prices with the estimated DMV prices and determined that Pelham's vehicle selling prices are around 7% more than the estimated DMV prices. And this is shown on Exhibit A, pages 177 and 178. Based on the DMV and actual report of sales information, the department calculated sales for resale, sales paid at the DMV, and sales tax not paid at the DMV percentages. And these percentages are shown on Exhibit A, page 170. The department also obtained Pelham's auction house purchase information, and these are shown on Exhibit C. Based on the estimated DMV prices and auction house cost amounts, the department determined overall audited vehicle sales markup of around 64%. And this is shown on Exhibit A, page 163. Based on this auction house purchase information, the department noted that 104 vehicles were not included in DMV sales information, even though they were sold during the audit period. And this is shown on Exhibit A, pages 167 through 169. The department calculated the selling prices for those 404 vehicles, those 104 vehicles by using information received from the department's consumer use tax section and using the overall audited vehicle sales markup. And these calculations are shown on Exhibit A, pages 167 through 169. Based on this analysis, the department determined unreported taxable vehicle sales of around $832,000 for the audit period. And this is shown on Exhibit A, pages 143 and 153. Further, the department found Pelham's Wells Fargo net bank deposits for Best Motors exceeded the audited vehicle sales based on DMV, auction house, and consumer use tax information by around $373,000. And this is shown on Exhibit A, page 139. Therefore, the department considered the excess net bank deposits as additional vehicle sales and used this net bank deposits difference with taxable sales and sales tax not paid at DME percentages to determine additional taxable motor vehicle sales of around $235,000 for the audit period. And this is shown on Exhibit A, page 139. For big tires and glass to you, the department used Pelham's federal income tax return information, Form 1099-K information, tire recycling reports, merchandise sales records for first quarter 2016 and fourth quarter 2016 to verify the accuracy of reported taxable merchandise sales. Pelham provided its merchandise sales records for first quarter 2016 and fourth quarter 2016, and these are shown on Exhibit D and Exhibit E. The department spot tested first quarter 2016 and fourth quarter 2016 and noted several errors, including the collection of excess tax reimbursements, the taxable item sold ex tax, and the recorded taxable merchandise sales exceeded the reported taxable sales on the first quarter 2016 and fourth quarter 2016 sales and use tax returns. And this is shown on Exhibit A, page 183. Then the department calculated Pelham's unreported taxable sales percentages, and these percentages are shown on Exhibit A, page 183. The department used the reported taxable sales and respective unreported taxable sales percentages to determine unreported taxable merchandise sales of around $725,000 for the audit period. And this is shown on Exhibit A, page 182. To verify the reasonableness of these recorded merchandise sales, the department analyzed Pelham's merchandise purchases and pricing policies. Pelham did not provide complete purchase information for the audit period. Therefore, the department used the purchases reflected on Pelham's federal income tax return for years 2016 and 2017. To give a benefit to Pelham, the department used the audited vehicle sales markup, and total purchases reflected on federal income tax returns to determine Pelham's merchandise purchases of around $542,000 for years 2016 and 2017, instead of using Pelham's federal income tax return purchases and auction house purchase amounts. This is shown on Exhibit A, page 289. Then the department compared the recorded merchandise sales of around $655,000 with the merchandise purchases of around $542,000 and calculated recorded merchandise markup of around 38% for year 2016 and 17% for year 2017. And these recorded markups are shown on Exhibit A, page 289. To verify the reasonableness of these recorded markups, the department attempted to conduct a shelf test, but Pelham failed to provide current sales and purchase invoices, and this is shown on Exhibit A, page 180. Therefore, the department used Pelham's cost profit analysis reports to calculate the merchandise markup of around 83%, and this is shown on Exhibit A, page 181. Based on this markup, the department determined it is required to mark up Pelham's merchandise purchases to determine accurate merchandise sales for the audit period. Then, the department used Big Tire's purchase available for sales and markup of around 83% to determine audited sale of around $993,000 for years 2016 and 2017. The department then compared the audited merchandise sales with recorded sales to determine additional sales based on cost plus markup audit method of around $338,000 for the same period. The additional merchandise sales based on cost plus markup method were compared with recorded sales to calculate respective error rates for years 2016 and 2017. And these calculations are shown on Exhibit A, page 180. The department then used recorded sales with the respective error rates to determine additional merchandise sales of around $551,000 for the audit period. And these calculations are shown on Exhibit A, page 179. According to Pellen's first quarter 2016 and fourth quarter 2016 sales records, Pellen apparently coded its used tire sales as non-taxable sales. Based on those sales records, the department calculated the average used tire selling price and the ratio of used tire sales to total tire sales. And these are shown on Exhibit A, pages 252 and 286. The department also determined that Pellen provided used tires for optional warranty repairs. Since Pellen did not provide records of its used tire purchases for the audit period, the department obtained Pellen's used tire recycling reports from Cal Recycle for years 2016 and 2017. Based on this information and Pellen's sales record for first quarter 2016 and fourth quarter 2016, the department determined unreported taxable used tire sale of around $165,000 and unreported use tax on used tires withdraw from retail inventories for optional warranty repairs of around $45,000. And these calculations are shown on Exhibit A, pages 211 and 214. Pellen's sales records for first quarter 2016 and fourth quarter 2016 also disclose that Pellen collected sales tax at a rate of 8.5% on merchandise sales, whereas the applicable sales tax rate in Sacramento County was 8%. Therefore, the department used the reported taxable sales, recorded taxable sales, collected sales tax amounts, and correct sales tax rates and calculated respective error rates for first quarter 2016 and fourth quarter 2016. And these calculations are shown on Exhibit A, page 185. The department then used the reported merchandise sales and respective error rates to determine excess tax collected measure of around $67,000 for the audit period. And this is shown on Exhibit A, page 184. Pellen reported $30,000 as fixtures and equipment sales on its fourth quarter 2017 sales and use tax returns. And this is shown on Exhibit A, page 125. However, Pellen's 2017 federal income tax return indicated that the sale value of business property was $108,000. Therefore, the department determined the difference of $78,000 as unreported fixtures and equipment sales for fourth quarter 2017. And this is shown on Exhibit A, pages 290 and 295. In total, the department determined unreported taxable sale of around $2.7 million for the audit period. And this calculation is shown on Exhibit A, page 7. The department then compared the total unreported taxable sales with the reported taxable sale of around $574,000 to calculate the error rate of around 470% for the audit period. In addition, upon review of Pellen's third quarter 2017 sales and use tax returns, the department found that Pellen's business location was subject to the County of Sacramento district tax rate of 0.5%. But Pellen did not report any district taxes for this period. Therefore, the department calculated the amount of unreported district taxes based upon reported taxable sales of around $34,000 for third quarter 2017. And this is shown on Exhibit A, page 293. The audit calculation of unreported taxable sales for the audit period is based on the best available information was reasonable. When the department is not satisfied with the accuracy of the sales and use tax return filed, it may rely upon any facts contained in the return or upon any information that comes into the department's position to determine if any tax liability exists. A taxpayer shall maintain and make available for examination on request by the department all records necessary to determine the correct tax liability under the sales and use tax laws, and all records necessary for the proper completion of the sales and use tax returns. When a taxpayer challenges a notice of determination, the department has the burden to explain the basis for that deficiency. When the department explanation appears reasonable, the burden of proof shifts to the taxpayer to explain why the department asserted deficiency is not valid. Since Pellen failed to provide necessary records, the department relied upon the best available information to determine the unreported taxable sales for the audit period. The audit calculation of unreported taxable sales based on the best available information was reasonable. Pellen disagreed with the audit finding and argued that the audit methods used by the department to calculate the audited taxable sales overstate Pellen's liability. Pellen believed that the bank deposits analysis should be used instead because the funds from each sales transactions were deposited into his bank accounts. Using bank deposits and taxable part percentage, Pellen calculated unreported taxable vehicle sales amounts and merchandise sales amounts. As support, Pellen provided two spreadsheets to support his non-sales transactions. Upon examination of those sales records, the department noted that the Pellen did not provide any source documents or any other information to corroborate the figures listed on those spreadsheets. Nevertheless, the department reviewed and analyzed this information and ultimately rejected them. Upon examination of Pellen's calculations, it is determined that the department allowed some of the non-sales transactions during the audit, and Pellen failed to provide source documents or other information to corroborate the other disallowed amounts listed on those documents. Pellen also failed to provide support how it determined taxable merchandise sales percentage, as the department determined a taxable merchandise sales percentage of around 53% using Pellen's own merchandise sales records for first quarter 2016 and fourth quarter 2016. In conclusion, since Pellen did not provide complete books and records, the department was unable to verify the accuracy of reported taxable sales using a direct audit method. Therefore, an alternative audit method was used to determine unreported taxable sales. Accordingly, the department determined the unreported taxable sales based on the best available information, while the appellant did not provide complete books and records necessary for a secondary audit method to verify the reasonableness of the audit finding. The available evidence demonstrate that the audit results are reasonable. Therefore, the department requests the appeal be denied. This concludes our presentation. We are available to answer any questions the panel may have. Thank you.
Thank you. Judge Geary, you have questions?
Yes, please, for both parties, I believe. For respondent, did you happen to notice in reviewing the documents that the deductions listed in, I think it would be Schedule M1, are not the same as those listed in Schedule M? The numbers aren't jiving, and if you've noticed that, do you know why?
So, Judge Giri, which are you referring to, the used tire calculation?
Some of them.
Okay.
There were several, I think. I didn't make a list of them, but did you notice there were some differences?
The which schedule number that you are specifically asking? Because we, the department used the Pellan's first quarter 2016 and fourth quarter 2016 and calculated used tire sales and also the new tire sales, and use that information with the recycling reports to determine the used tire sales.
Was that the only area that you saw a difference?
Yes, Judge.
I have some questions. Thank you, Mr. Samara Wakama. I have some questions for the appellant. The LLC that is the party, SAII, is that supposed to be SA2, Roman numeral 2, or is it?
No, it's II.
Okay, so SAII Enterprises LLC, was it doing business formally as these different entities, the Best Motors, the Big Tire, and the glass and recycling companies?
No, Judge, so it was originally it was Big Tires Company, and I used to do glass, but I was not doing. I stopped it doing. It was a separate name I had, DBA, Glass to You, but I was not doing much. And in the same LLC, when I started the auto sales, that was Best Motors, started in 2016. So it was a LLC under two DBAs, which was Big Tires and Best Motors. The Glass to You was individually. I started, but I was not doing much in the glass at all. I was more doing the repairs and the tires and stuff. But what they're saying for the tires, used tires record, what they collect, when we were getting a used tires, it was coming in a bulk, and sometimes the tires were just bad. We are not able to use, so we have to just straightly do a junk. So if I buy 20 tires, and if it's only 2 is good or 10 is good, rest is gonna go in junk.
Okay, let me just interrupt you. I'm just right now, at this
Sorry.
point, trying to make sure that that this case has the correct name. We have it carried as doing business as Best Motors, but Mr. Samar Bakrema, is this really the LLC doing business as Best Motors and Big Tire?
Yes, Judge.
Okay. Back to the petitioner, and this may be something that your representative needs to respond to, but there's actually 9 separate audit items that were at issue here. And do you dispute all 9 audit items? Yes. Turn your microphone on first, please.
Yes, Judge.
You do, okay.
Yeah.
Bear with me for a second. The petitioner, don't forget to turn your microphone back on when I ask my question. This is, I think it's for you, Miss. The petitioner asserts that when a buyer demands the title, that it is not required to pay the sales tax.
Yes.
On what does petitioner base that argument? On what law or regulation does it base that argument?
So, like, demand of title sales, technically, the buyer is supposed to pay sales tax on that
Well,
for demand of
your
titles.
client is the retailer, petitioner was the retailer in this case, but petitioner contends that because the buyer requested title, that the responsibility of the retailer to pay sale taxes transfers to the buyer? Is that its position?
So I'll let Mr. Kumar answer that.
That's fine. Go ahead, Mr. Kumar.
Judge, so when I was going through the DMV for my licensing and stuff, there was some of the dealers were coming in and were talking about this demand of title sale. So I asked them, what is demand of title sale? So they explained me how this thing works. So it's when a customer comes in and they would like to grab the whole jacket and took it to the DMV and do the transfer on their own. Where we don't do, we give them a report of sale, we give them all the buying, the title, bill of sale from one party, one dealer to second or third or fourth, how many time bill of sales. So we give them all together and they go to the DMV and they process it and collect the fees. If there's any back fees or anything, or the taxes, because we give them buyer's order, which has specifically what the vehicle sell for and everything. And on the sales tax, it specifically shows it's not collected. And the DMV required to have a statement of fact from our dealership and from the customer stating specifically RO number, report of sale number on there, and states what is the reason for doing this. So we specifically state in there, as per customer demand of title, the customer is gonna be transferring this vehicle at the DMV and will be responsible for any back fees or current registration fees, and the sales tax will be collected at the time the transaction will be completed at DMV. That specifically says on the statement of fact.
And you indicated during your testimony, I think that you checked with some customers and there were some number, I think you may have said 5 customers reported to you that they in fact paid the sales taxes, and you somehow confirmed that with DMV, is that correct?
Yes, the page number 1152 to page number 1166, it shows a proof of what I gather from some of the customers, the registration card after the registration, which specifically shows the registration is being paid and the taxes is being paid.
Yes, sales tax is paid on those, It's actually Exhibit 1, page 101 to 116.
And is it the petitioner's, the appellant's position that the department did not recognize that?
Yes.
All right, Mr. Samara Wickrama, does the department agree that if a purchaser of a vehicle demands title and the dealer goes through the process as described by appellant, that the responsibility for paying sales taxes shifts from the retailer to the customer?
Judge Gary, based on the 2017 cuts information, the department identifies some buyers paid taxes directly to the DMV. Even they didn't pay the full amount, they paid some. That exact, if you check the Exhibit A, page 171 and 74, we if the customer went and paid tax to the DMV, we make an adjustment, and that's why we identify tax paid to the DMV percentages versus tax not paid at the DMV. So if the taxpayers customers paid tax, then we consider as is not responsible for this audit, and we make that adjustment. Even the customer paid a lower than the actual amount. So we didn't make an adjustment for that difference, because in specifically Schedule 12D1, page 171 and through 174, it says tax paid to the DMV and the actual tax. So most of the time, the customer didn't pay the actual tax, but we didn't assess that difference in this audit. So it benefits the taxpayer.
Okay, that's a little different. That's one of the questions I asked.
Judge Gary?
Yes.
Sorry to interrupt. Can
Yeah.
I answer? I think the
Sure.
question you were asking was, does it shift the responsibility from the retailer to the customer if they do the demand title? A licensed vehicle dealer in the state of California is a retailer and required to collect the sales tax, or they're liable for the sales tax on any retail sales they make. They cannot shift the responsibility for the sales tax from the retailer to the consumer in these transactions. However, as Mr. Samara Wickrama stated, we did look at the DMV information to see if the customers did pay the tax, and we gave them the credit on those transactions. But the vehicle dealer is still liable for the sales tax on the retail sales.
Thank you. Mr. Parker, did you say, Mr. Samara Wickrama, that the department allowed credit for the full amount of tax, even though the customer may not have paid the full amount?
Yes, Judge.
Those are all the questions I have. Thank you.
Thank you, Judge Geary. Judge Ralston, do you have questions?
No questions, thank you.
I did have some questions. 1 minute. To follow up on Judge Geary's question about the 9 audit items, there appears to be a few that pertain to the bank deposits, and then others that do not. So are you contending that the audit items not related to the bank deposit are still in a disagreement?
Yes.
So, for example, the sale of assets?
Sale of assets, so we are accepting that, sorry.
Okay,
Yeah,
so
that
that
30,000, yes.
Can I say
Mr.
something?
Kumar?
Yeah, so the sale asset, that the business was sold with goodwill and asset. So what the department is doing, they're putting everything into the sales of asset. The escrow was showed there was a goodwill, and they collected the taxes on a 30,000 for assets. But what they are saying, the whole thing, business, even though goodwill is taxable. 1 point.
Okay, Mr. Samar Wickrama, can you address the appellant's goodwill argument on the assets?
Yes, Judge. If you go to Exhibit A, page 295, there is federal income tax, the appellant's federal income tax returns form 4797. It specifically listed 3 items: alignment machines, tire racks, car lift. That is, alignment machine is $25,000 selling price, and the tire rack is $25,000, and car lift $58,000. So that is $108,000. So Pelland only reported $30,000. The department took the difference as unreported assets for the audit period.
Thank you. Mr. Kumar,
So what they are saying, that was original price when it was purchased. When I sell it, it was not for that, it was being used. So they are putting that, the whole amount as in the business sale. I just sold the business with a goodwill, but what they're referring, it's as a equipment sale.
I'm sorry, so the IRS Form 4797 listed the sale of the assets.
Sorry, what was the page number?
So can we get like PDF that page number? It's so hard to look at otherwise. Like on the side, if you see.
651.
651, okay.
Yeah.
Is it page number 651, sir?
I believe it's 643.
643. Sorry, we are having a hard time. See, anywhere 643 page.
Oh, I'm sorry.
The bottom of the page should show Exhibit A, page 295 of 321. The hearing binder that I have shows it's page 651, but that's the specific page, the Exhibit A, page 295.
Thank you.
Okay. 30,000 लिखा ना?
Yeah. Do you pay by this amount consistent?
Hey, next page.
Like forward or backward?
I think forward.
Okay.
Fixture and equipment.
Equipment, yes. So it's page 668, the PDF version.
The 668 page fixtures and equipment was sold for 30,000 in the business sale contract.
Okay, so on your income tax return, you reported adjusted basis of 95,000.
We are having hard time finding that page. What exhibit is it?
Exhibit A, page 290.
Exhibit A. only up there. 290.
Judge Wilson, I have the hard copy. If you want, I can share.
That's fine.
Okay.
Please.
That's the same one I was showing you, yeah. So they are not considering it as a goodwill. It was sale of fixed assets. Goodwill is it for 30,000.
Hey, 30,000 the equipment sige.
Yeah.
This 70,000 the goodwill sige.
Yeah. But yeah, they charge tax on that 70, the remaining balance actually.
Yeah.
But we have to show the goodwill one. We don't have that here. Okay.
Pachi, yeah.
Let me show you that page.
52. Okay, आता है page है ना?
Yeah.
Yeah, I see that one. Thank you.
Ms. Alec, Mr. Kumar, do you have a copy of your sales contract that shows
Let me see.
that the
Let me see.
assets were only 30,000 as opposed to what you reported on the IRS
वो
form?
जरा page दिखाया ऐसे आप होने और इधर लिखा ना fixture and
That was page number. Let me see. Find page number. I think when the email came down from giving me this one. I didn't see that page. I think it was emailed.
If you were going to have a private, you might want to turn off your microphone so it's not picked up. Thank you. Ms. Alec, would you like a brief recess so you can figure this out?
Sure.
Okay, we'll take a 5-minute recess.
Sure. Thank you. Thanks.
Okay, we are back on the record.
Yes.
We're
So
back
yeah,
on the record.
yes.
please.
So I just emailed the requested document regarding goodwill to the like evidence email.
Okay, thank
Yeah.
you. Additional questions, just one moment. Looking at all the different audit items, we have 12L, which is the additional taxable used tires sales based on the Cal Recycle reports. What was your contention in regards to that?
So, see, regarding the used tires, what they saying, I provided the record for what I be able to gather quarter first and quarter fourth, and what they're saying they're using it for the used tire recycle. But earlier, like I explained, when we buy a junk tires, the used tires, most of them are junk because it's not like we taking off all the good tires and selling them as a used tire.
Okay, let's look at. The next item is 12E, the additional taxable tires and parts based on a markup on cost. Do you have an argument for that?
Sorry, say that again.
It's Schedule 12E, additional taxable tires and parts sales per markup on cost.
So what they're doing, they're marking up too crazy. It's not even a yearly sale on, they're using the used tire junk report, and they're saying like there's a multiply 80% markup, which is unreal. Can't do that. So I'm denying that.
Okay, do you have anything to dispute that number, the markup number?
No, I don't have any additional document.
Okay. Next, we have 12M, which is the used tires consumed per optional warranty, subject to use tax.
We don't give no warranty on used tires, so where's this comes up?
So it's regarding an optional warranty?
We
You d-
don't, used tires don't come with no warranty. It's sold as is.
You don't sell an optional warranty
No,
on the tires?
no.
Mr. Samara Wickrama, can you address the warranty?
They have, the pellet has warranty sales. Based on the first quarter 2016 and the fourth quarter 2016, the department saw using used tires for warranty repairs. So that's the reason the department identify warranty sale of tires and took the markup out and calculate the cost. So according to the audit notes, Pelens has a website, and in the website also it indicates they provide optional warranties.
So warranty is only for when we buy a new part, when we were doing repairs. That is the only warranty. Other than, even though when we were getting a new tires, We don't offer no warranty. We not sell no warranty. Whoever the supplier did not give us no warranty. So it's, if anything is going wrong with the tire we sell, it's gotta go back to the manufacturer or the supplier who we buy. Even though like when I'm buying a used tire as in a bulk, and it's just my luck what tire is gonna be good or not. That's it. Rest is junk. So if I'm not getting no warranty, how I'll be able to sell a warranty? There's no way in my whole time period I sell a used tire warranty for any price.
Okay, so it's your argument that there are, or your testimony that there's no sales invoices that show optional warranty?
Not even in my work orders, there's no warranty is being sold for used tires in my whole career. Even though right now we go to any shop, they will not sell no warranty. It will be just as is used tire. You bought it, you gone for a day, that's your luck.
Okay. Next. One of the audit items is in regards to district tax errors. That's on Schedule 12Q. Are you contending that you did not make any errors in reporting district tax?
So I was not aware about that, so I was just looking on the sales tax rate and I was just doing that on my invoice.
Okay, so are you in agreement with that error?
So the client is saying he's not aware of that, like if he collected like access or if he made any error on that, so.
But this is included with too far numbers out with their manipulation where I'm making 70% of the markup. I wish I could do 25% or 40% in today's market. There's no as such 70% markup any shop is doing. Nobody's doing it. So where the calculations come up, all those numbers are not correct.
So client is not accepting that. It's not in agreement with that.
Thank you. Did we already go over 12F? Let's see, unreported taxable tire and part sales based on recorded versus reported differences. For first quarter 16 and fourth quarter 16.
So that is, what, 700,000? Yeah, that is not correct either because I did the business from 16 4 quarters and 2 quarters of 17. The business is being sold. They manipulated the numbers too higher where there was no sale.
Okay, so the schedule shows what you have recorded versus what you reported.
So it's only on the basis of first quarter 16 and fourth quarter 16. So, but the other quarters are also included, so they are like, more of the projections. So client do not accept these,
Okay,
Yeah.
and based on,
Based of unrelevant projections, there's no, like the third quarter I did no sale. They are saying I did like almost $200,000 in sale. Business is shut down. There's no much equipment to do. And the fourth quarter I did nothing. They're having almost $150,000, $200,000 sale. Where that sale I'll be able to do? I did anything, didn't purchase anything, because at that point when I was selling the business, it was in my mindset that I cannot buy more because I'm not able to sell more.
okay, thank you. Going back to your new exhibits. Exhibit 2. The original exhibit we received showed through October through November of 2017 as sold used equipment as your description. And then today, I see it's changed to borrowed. Is there a reason?
No, there was error at my end, so I just discussed with Mr. Kumar in the morning. So then we fixed the error and just gave it to CDTF in the morning. We fixed that.
Okay. I also noticed on the exhibits that there were transactions that were accepted by CDTFA. Did you happen to notice those?
So on which exhibit or page?
For example, Exhibit 2, we have 4/26/16 Wells Fargo, transfer from Wells Fargo, $1,000. That appears on CDTFA's Schedule 12J2A, line 11.
So, but the total bank deposit, they were per CDTF, they were 2.99 million in the bank. But there were additional 735, which were supposed to be excluded. So they are not accepted by the CDTFA.
Okay.
They are not excluded.
So the total, the total sale will be roughly about 2.1 to 2.2 mil. The rest about in the bank, the transfers and the funds in together, it's about 2.9. But what they are saying, I believe it's 1.7 mil in addition, where that fund goes.
Okay, so my question was, are you aware that they did accept some of these?
No, which one?
but- No,
I
actually,
show
we are not.
Exhibit 2, there's roughly, in May of 2016, there's $4,500. April 16, there's $1,000, and then October of 17, there's $23,000.
Oh, this one.
But still, they are not, enough, because I didn't look at that, what they accepted, but still, it's overall, we are expecting around, they'd be expecting around 735,000, not merely 45,000.
Ms. Alec, we just received your email printed out of the allocation for the purchase price.
Yes.
The signatures at the bottom, is there more to this, like a contract, or is this the only page you have?
Those are my signatures. No, just this one.
So do you have more to this contract?
No, this was what you call the contract in a brief description. What was we were selling for?
Okay, so this describes the sale of your business?
Yes, like what I'm selling for. What was the amount I'll be collecting for?
Just the basically allocation.
Right. I guess I was looking for the full contract that
I
shows
think that
the
contract,
buyer's names. the
that
se-
contract was part of that. So-
I think there was an escrow statement, right?
Go ahead.
So yeah, I did see that contract in the documents. In the Office of Tax Appeal documents, let me look that up. So I did see that document, the final, the contract, sales contract.
Okay.
Yes, let me look at it. It's Exhibit A, page 308.
I do see the closing statement. Is there any, like, agreement between the parties other than the closing statement?
That is it.
it?
That's all, yeah.
Thank you. I don't have any other questions at this time. Panel, Judge Geary, any further?
No questions, thank you.
Judge Ralston?
No questions, thank you.
All right. Ms. Alec, if you would like 5 minutes for closing or rebuttal, you have 5 minutes.
Okay. So, all right. So, like, I will request Office of Tax Appeals, just to go with the bank statements, because whatever all the deposit, all the money, it came in the bank. So there are two businesses, like auto sales and the tire, a repair shop. So everything comes in the bank, and that 1.5 million, that is from the from the DMV data. So that number is matching. So that makes sense after conversation with the client, that 1.5 million sales for 3 years, and the claim demand of title transactions for 308,000, that should be accepted, and then 85 resale, which is already accepted by the CDTFA. So roughly around the additional tax on auto sales 45,000, and additional tax on part sales 21,000, total 66,541. If the department agrees, so my client is agreed to pay that tax. Yeah, that's pretty much it. Thank you.
Thank you, Ms. Alec. Mr. Samawikrama, do you have anything you would like to add?
No, we have nothing to add.
Okay, great. Thank you. Have you had a chance to look at the allocation that was just handed out?
Yes, Judge.
And do you have any objection to that being admitted?
We have no objections, but we use federal income tax, Pelham's federal income tax return to identify the sales price of fixtures and equipment for that business, and it specifically listed 3 assets for $108,000. So we use the federal income tax return unless there are any information to show that the amounts listed in the federal income tax return is incorrect.
Thank you. Hearing no objection, we'll go ahead and admit this allocation as Exhibit 5. I don't have anything further. Do you, Judge Geary? No? Judge Ralston? No? All right. That concludes the hearing for today. The case is submitted today, July 22nd, 2025. The record is now closed. Thank you, everyone, for participating today. The panel will meet to deliberate and decide your case. We will issue a written opinion within 100 days of today. And this hearing of the appeal of SAII Enterprises, LLC is now concluded. Thank you.
Thank you.
And this concludes the hearing calendar for today.